and welcome. You have tuned into the closing trades right here on ET Now. I'm Shrishti Sharma, and with me as always is Snehi Shah. And Snehi, seems like another day of declines coming in for the benchmark indices. While there were hopes at the start of the trading session that for now Nifty can build on to those gains, if at all it sustains above that 24,500 mark. But since the word go, we are seeing that selling pressure across the board. And yes, it's Nifty at the day's lowest point with almost 200 points of cut right now. And not just that, even Nifty Bank is reeling under pressure with over 400 points of decline. Yes, SBI numbers did come along, wherein the slippage ratio was actually better than what the street was expecting. The asset quality was stable, though the stock has recovered from the day's lowest point, but couldn't give that cheer, or rather bring that momentum back into the banking index. But yes, a lot of these stocks will be in focus. But since we are talking about SBI, let's go across and listen into the management itself.
Improving prospects of Kharif agricultural season and continuation of strong momentum in the services sector on one hand, and deceleration of tax collections, industrial activity and vehicle sales on the other. RBI estimates GDP for FY26 a growth rate of 6.5% and inflation at around 3.1%. The MPC in its latest meetings, as you're all aware, has kept the repo rate unchanged at 5.5% and maintained a neutral stance. Coming to SBI, the results for Q1 FY26 demonstrate the bank's continued ability to operate profitably at scale due to our substantial core strengths. These advantages stem from our institutionalized framework, which is guided by continuous improvement in processes and a commitment to fairness for all stakeholders. The total deposits have grown by 11.66% year-on-year to 54.73 trillion rupees. Term deposits have grown by 14.23% year-on-year. Our current account deposits have grown by 30.69% year-on-year. I'm sorry. And CASA deposits have grown by 8.05% year-on-year, with a CASA ratio at I'm sorry. At 39.36%. Importantly, the current account growth has continued to remain strong for the bank during the year despite competitive market environment. Our foreign offices deposits have grown 10.42% year-on-year. I'm glad to share that the credit growth continues to be good, with segments like SME, agriculture and retail personal banking posting healthy double-digit growth at 19%, 12.67% and 12.56% year-on-year respectively. The corporate sector has grown by 5.7%. Our foreign offices advances have grown by 14.81% year-on-year. The domestic credit deposit ratio was at 68.88% at the end of Q1 FY26, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q1 FY26 was 0.75%, while the credit cost for Q1 FY26 stood at 0.47%. The net NPA ratio improved by 10 basis points year-on-year and stands at 0.47%. We have a well-provided NPA book with PCR at 74.49%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrate the quality of our loan portfolio, the robustness and improvement in our underwriting processes, and improved collection efficiency. The bank remains capitalized, and our capital adequacy ratio has improved by 38 basis points sequentially and by 77 basis points year-on-year, and stands at 14.63% against 14.25% as on 31st March 25. CET1 ratio has also improved by 85 basis points year-on-year to 11.10%, and both the ratios are well above regulatory requirements. Based on the current profitability and growth trajectory of a bank, we believe we have sufficient headroom to take care of requirements of business growth. Bank has raised, as you're all aware, equity capital of 25,000 crores during the current quarter, which will support additional loan growth of approximately 2.5 trillion rupees. I'm glad to share the progress we have made in the digital banking, which is an ongoing journey, and it continues to be an important customer acquisition engine for the bank across asset as well as liability products. The share of alternate channels in total transactions increased from 98.2% in Q1 FY25 to 98.6% in Q1 FY26. More than 9 crore customers have registered on YONO, with 66% of regular saving accounts opened through YONO in Q1 FY26. Our subsidiaries are consistently performing well and continue to create significant value for all the stakeholders. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and maintain leadership position in the respective businesses. The bank continues to report ROA and ROE greater than 1% and 19% respectively at the end of Q1 FY26. We reported total assets worth 67.69 trillion, total advances at 42.55 trillion, and total deposits amounting to 54.73 trillion. SBI continues to be the leader in all the risk-adjusted profitable lending and liability pools in India. Consequently, SBI's ROA above 1% is derived from the scalable fundamentals of banking, that is, improved business growth, controlled operating expenses, and maintaining robust credit quality. The bank's ROE profile is currently higher than its credit growth, implying CET1 accrual in the future. From this strong position, our goal is to consistently achieve a ROA of over 1% and ROE over 15% through the business cycles. To conclude, I thank you all for your continuous support of the bank. We consider it as a privilege to be able to play a role in driving the progress and contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open for taking your questions.
Thank you, Chairman, sir.
Okay, that was the word coming in from the chairman, Mr. C.S. Sethi of SBI, and overall it's been a mixed quarter one for SBI. Slight miss on NIMs and net interest income is what we've seen, but it's been a healthy asset quality that has boosted growth this time around. So all in all, mixed set of numbers coming in, and in fact, after the word of coming in from the management, we've seen a slight bit of a recovery in the stock right now, marginally in the green. That's why the stock has inched back right now, wherein Mr. Sethi just said that the ROE goal is to be around 1% and ROA expected to be around 1%, and ROE, the endeavor is to be around 15%. So those are some of the targets that the bank is given, and on that note, the stock is climbing up as we speak. So good recovery is something that we've seen in the stock as well. But while we are talking about earnings, it's also numbers that have come in from Grasim. And that stock has been in focus, and that stock was slightly under pressure too. That was the other Nifty company that came out with its earnings, and well, yes, all eyes are going to be on Tata Motors when those numbers come out. So in fact, we have lots to talk about, lots to chat. Let's welcome on board our guests for the day. We have Mr. Dhananjay Sinha, who's joining us on the show, and let's get a better sense of the kind of numbers that we've seen so far. And Mr. Sinha, hi, and good afternoon. Thanks so much for your time. Give us a sense on what you are making of SBI's numbers. What's your first read through here?
There has been a sort of a pressure as far as the margins concerned. That's kind of an expected thing, and I think the net interest income is also kind of flat on a year-on-year basis. So I think they have been able to generate operating profit by relying a lot on other income and also curtailing a certain amount of operating expenses. So there is a certain optimization that's happening, and also the fact that uh, uh, they made trading profit also, so that's contributing to the other income. So that's broadly the situation. Of course, there is a positive surprise with respect to the asset quality, the provisioning, etc., which has been moved up a little bit, but generally asset quality numbers look to be okay. So I would say that there's nothing, there's no negative surprises here by and large. I would say the trend of flattening NII is something that has been shared by other banks as well. So I think the pressure on spreads, etc., has been there. RBI has cut rates and stuff, so things have to be looked at from a future perspective. But I think, as such, on a standalone basis, the SBI numbers looks to be, matching the market expectation. There's no negative surprise there.
Surprise is indeed taking the stock higher, and yes, of course, SBI remains to be one of the few stocks holding in the green within the banking space. But Sharon, why don't you help us with the chart reading as well, because with this up move, the stock managed to move above that 800 odd mark. What's your read through here?
So, Srishti, I think a decent commentary from the management. The stock has recovered from its days lows of around 790. So, good recovery. Market is giving a thumbs up. But again, I don't see that kind of upside. It has a strong resistance between that 825 and 830 mark. Unless and until it starts moving or trading about that level, I don't see any meaningful upside coming in the stock. The stock has a habit of going in a sideways consolidation for very long periods of time. So we'll have to wait and see. But the stock is moving still pretty well, given that Nifty is almost trading at days low, Bank Nifty also at almost at days low. On that front, it's still good. But again, a small resistance in the next 15-20 odd rupees. So we'll have to wait and see and review it if it starts moving about that 830 odd mark.
So those are going to be the next levels to watch out for SBI on the chart. There's been no effect of that on the Nifty PSU Banks or the Nifty Banking Index right now. In fact, almost on the Nifty 52, we're very close to the session low right now. A 0.7% cut is what we've seen. 24,420 is the level we are at right now. Let's slip into a short break and talk more about the markets on the other side when we return.
Associated with SBI. Be alert, be scan safe.
Full-Time Plastics Limited, a manufacturer of plastic consumerware with exports to 29 countries, having 1,848 stock-keeping units across 8 categories, now makes an initial public offering of equity shares of face value of 2 rupees each. The 100% book-built offer being offered in a price band of 260 to 275 rupees per equity share. Opens August 7th, closes August 11th, 2025. For risk factors and more details, refer to the red herring prospectus.
Bangalore boss, IT capital.
Arey Mumbai, financial capital.
Try Chennai, healthcare capital. SaaS capital, automobile capital.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
Adani presents Times Now Amazing Indians Awards 2025.
सर इन्हें क्रिप्टो करके लाइफ सेट करनी है, पर कॉन्फिडेंस नहीं है।
कॉन्फिडेंस चाहिए?
हाँ सर।
Defuse the bomb. All the best. डर लग रहा है? नहीं आता था, हलवाई है। कैप्टन, इन्होंने सीखा है, इसलिए ये कॉन्फिडेंट है। अगर आपको क्रिप्टो में कॉन्फिडेंस चाहिए, तो क्रिप्टो सीखना होगा। क्रिप्टो कोच, CoinDCX, लर्न करो, क्रिप्टो करो।
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 13. Season 13 is built around 3 powerful words: agility, ambition, ascent.
MSMEs are the pillars. So they can be leaders of tomorrow.
MSME should not be thought of as a midget It should be thought of as an infant that can grow.
Women are coming into the fold as well. Women want to take up entrepreneurship.
In a world redefined by disruption, this new season delivers a sharper, future-ready lens to navigate what's next.
Navigating properly in this volatile situation, for which I think our MSMEs are quite competent to do that.
Focus on efficiency and resilience.
Even $1 trillion company was MSME someday. Today's MSMEs are going to create future for tomorrow.
That if we have to be successful in India or globally, you have to start with the consumer in mind.
Being very agile in a business is kind of a cornerstone on how you would get to become a big business.
So get ready for insights and inspiration as we help India's MSMEs rise, adapt and lead on IDFC First Bank presents Leaders of Tomorrow Season 30.
Presented by IDFC First Bank, always you first.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
My Lenovo AI says you can get 2 degrees more swing. You can do more with your wrist.
Something like this?
Let me simulate. Push the ball with your wrist.
Crucial point for the team. They need a wicket.
Yes!
And it's out! Unbelievable swing!
Lenovo, damn the odds.
Hi there, welcome back to Closing Trades. Let's just take a look at some pockets of the market that are not doing all that well. If you take a look at the sectoral move right now, all the sectors are in the red, but the least losing sector today is Nifty PSU Banks. Of course, some recovery seen on this index after the numbers coming in from SBI. That's a mixed set of numbers coming in. But it's actually names like Bank of Maharashtra that are up 4%. Central Bank is up 1.3%. Indian Bank also trying to just claw to the green right now. Let's also welcome on board Mr. Saumil Mehta, Head Alternate Research at Mirae Asset Sharekhan, joining us. And Saumil, what is your sense of the entire PSU banking space right now? Because while the overall breadth of the market seems to be largely negative, there are a handful of stocks from this pack that are actually trading in the green right now.
Hello, good afternoon to everyone. In the PSU space, I think there are a lot of stocks which are hanging around 200 daily exponential moving average. If you see, in fact, even Canara Bank, Punjab Bank, they're very close to their 200 daily exponential moving average. Talking about the large cap SBI, SBI is still in that gray area where it is taken support at 200 daily moving average multiple times. Taken support, it is trading around 20 and 40 daily moving average. So at this point of time, I would say I would suggest to avoid at this point of time, because till the time it does not give a close above the 20-40 daily moving average, starts making that higher top, higher bottom formation on the daily charts, till that time I would avoid. Anything above 816 would be the right time to enter SBI, and then we may see a good rally on the upside. But at this point of time, I'm really not looking for on the long side. I'm looking for on the short side, where Bank of India, Bank of Baroda, specifically Bank of Baroda, it has just taken resistance at 20-40 daily moving average. It is negative right now. I'll be waiting for a break on the downside, which is 234. Once it breaks this level on the downside, it will slide to much lower levels below 224, 220. So I'm a little bearish on the PSU pack stock specific till the time it does not break on the downside some crucial levels. Till that time, hold, but overall bearish.
That's the take. Coming in on select PSU counters, holds a bearish view at this point in time. But other than that, one of the other stocks that is indeed reeling under pressure is actually Biocon. We did talk about the numbers in the morning itself. The numbers were not that great. It was a clear miss all throughout, and it was the margins in their generic side that was not doing that very well. And even when we had a word with the management, they were highlighting the concerns over there, and along with that, it's definitely not giving the confidence to the investors. But Dhananjay, what's your reading on Biocon numbers? It's a 5% decline. The stock opened flat, but all throughout the day, it's a tremendous selling pressure is what the stock is facing. And what's your overall sense on the pharma pack as well?
No, I think so. I have not looked at the Biocon space. So basically, on the pharma pack, I think there is a overhang of the US tariff that is there. So I think there has been a significant correction across the pharma companies that have exposure in the US market. So I think this is under investigation. I think it will take about couple of months for the outcome to come out. So I think, this is somewhat exempt from the tariff hikes that has been announced in the US. So, there is a possibility that, whenever the hike happens, there might be, whenever we get to know what US wants to do eventually, we'll get to know what the reaction would be. But broader view that we have taken is that if the tariff hike happens, companies would be able to pass on those costs to end product prices. So, we are kind of equal weight at this juncture. We'll decide on what the eventual price one would look at. But I think if there is a adverse price reaction, I think we would want to buy into select names such as Sun Pharma, Orchid, Ajanta, and Cipla, 3-4 names that we are looking at very keenly. Not very negative at a broader level, because I think the cyclical sectors might actually see a more adverse market reaction, etc. But I think pharma, hospitals, etc., healthcare is something that I would sort of look for adding as we go forward. Yeah.
That's a take on Nifty Pharma, but Dhananjay, what about the entire auto space? Because now if you take a look at the sectors and how they've performed on a week-to-date basis after PSU Banks, it's actually Nifty Auto that is going to, it looks like, at least for now, is going to end the week in the green. There's a 0.6% uptick coming in on Nifty Auto on the weekly basis, the week-to-date basis. And some names like Hero Motor, TVS Motor, Maruti Eicher, Bajaj Auto, they've all done well. Within the entire auto space, Dhananjay, are you liking the two-wheelers more versus the four-wheelers? Is it the EV story that is more appealing? Or what is looking good within the auto space?
I think auto space is embroiled in this whole headwind with respect to the supply of rare earth magnets, etc., from China. So I think we are kind of selective. We are avoiding four-wheelers. We'll need to see how things pan out. I think there is certain process of negotiation that's happening. So I think there can be some disruption as far as supply is concerned. I would say relatively the two-wheeler space is looking better. TVS, Hero Motor sector, those stocks have actually come down. There has been valuation correction out there. And if there is a sort of a easing of the commodity prices, especially metals and all, we are seeing copper and steel, etc., there's a possibility of margin expansion there. So I think we generally are more positive on two-wheelers. We would like to have Hero Motors, TVS, even Eicher. So these are some segment within the auto space. I think I would say we are also somewhat positive on tractors. Escort is one name that we're looking at. So generally avoiding four-wheelers. And I would say in the EV space, we'll need to see. I think the increase in penetration in the EV two-wheelers that's been happening. And I would say that within the overall pack, within the two-wheeler space, also there is a sort of a shift in the market share that is happening. So there are interesting things out there in terms of price behavior and and penetration market share changes that are there. So Ola, Ather are things that are being considered. Bajaj is also in the fray. So I think we'll need to select one of those. Ather is something that we like relatively better than others.
All right, so that's the take coming in on the auto pack. But thank you so much, Dhananjay, for taking the time out and speaking with us. Really appreciate that. But with this, viewers, just 30 minutes left before we should shop. Let's also get you some of the trading ideas from both of our experts. And Sharan, you go first. Tell us what's the stock that you're eyeing right now.
So, Shristi, two stocks for today, one sell, one buy. I think NSDL has given a great move, as I mentioned again. So I think some rub-off effect can be seen on CDSL. It's trying to make a reversal on the charts. So go long on CDSL. Again, a very decent stop loss of 1555. Since the time I had given the graphic, the stock has corrected slightly. So I would suggest just manage your risk-reward ratio and take the stop loss down to around 1545 kind of levels. Target should be around 1600 to 1645 odd levels. Second stock, Nykaa, it's looking very weak on the charts. If someone wants, they can actually take a sell call in August futures. At the time of giving the graphic, it was around 205. The stop loss should be just 5 rupees. And if at all stock rallies up, 5 rupees, please take your stop loss. Target is equally down 200 and 195 odd level. I think if it continues trading the way it is, I think you can quickly see levels of 90 and even 185 on the charts.
Okay, so those are the calls that have made it to Sharan's radar. But Somil, what about you? Amid a market like this, are you recommending any sell calls, or do you believe now is a good buy on dips strategy, that deployment time? So what are your calls for the day?
I'm on the sell side. I think the markets are weak. Markets are forming low tops, low bottoms. So I don't like to fish the bottoms. My first sell call would be Lodha from the real estate pack, and Lodha has just formed a triangle pattern. I'm expecting that to break on the downside, trading below 200 daily moving average, trading below the short-term averages. Looks bearish to me in the medium-term outlook as well. So the stop loss would be 1260. A little higher side, but the targets are deeper, much deeper than 1125. So 1125 would be my first target. My second call would be again from the financial pack, which I mentioned previously as well, that the financials are not looking that great, and I'll be looking for sell side opportunities. I have a Shriram Finance, which has just broken out of a small triangle pattern on the downside, taken resistance at 200 daily moving average. Today is a very good momentum on the downside, so I'll be selling the stock for around 611, I think. Stop loss would be 631 and target would be 575.
Have been your strong movers, and even the other stocks like New India Assurance, post the earnings, there's been no stopping for these counters. What do you make of the life insurance counters? Let's try to understand more on that. And but before that, let me welcome Sudeep Bandyopadhyay on the show right now. Hi Sudeep, good afternoon and great to be speaking with you. And firstly, help us with your take on the insurance pack right now, because be it the life insurers, the health insurers or the general insurance companies, good set coming in at this point in time, at least no major disappointment from the earnings so far. What's your read through, and within the different segments, any particular pocket you believe is giving good opportunity?
Well, I've been positive on the entire life insurance space, and LIC has been our favorite for some time. I think this quarter's the numbers which came out, LIC definitely stands out. Whether you look at the NB margin or NVP, I think they came up with a fantastic set of numbers, and I think market is recognizing that, and the price has already moved up quite some bit. But from a long-term point of view, I think we still like LIC even at current levels. There is absolutely no problem whatsoever with the other insurance players as well, life insurance players as well, whether it's SBI Life or HDFC Life. Even those can be looked at. But if I have to pick one, I'll pick LIC at this stage. Overall, the health insurance, we are a bit cautious. The numbers do look good at the for the current quarter, but I think I'll be a little cautious. And as you were asking, if I have to pick up one segment, I will stick with life insurance, and LIC is our favorite.
Is Mr. Sudeep's favorite, and life insurance is the pocket that he's liking within the entire insurance space. On that note, let's also once again revisit the conversation with LIC. The company a steady Q1, and we caught up with the MD and CEO, Mr. R. Doraiswamy, on the way ahead for the company. He spoke to us about the plans for their VNB margin improvement and non-par in APE as well. Let's go across and listen in to what he had to say.
We are focusing towards a regular but gradual build-up of our VNB margins so that we are not behind anybody, and we are looking at building up in a continuous and consistent manner. So we have reached last year around 17.8, which this year will be, as the year progresses, there will be progress in our VNB margin this year also. We also took a directional change in 2022 itself, that we will be slowly improving the non-par component so that we are able to balance both. We will have par as well as non-par. So towards that, the last 3 years we have been bringing up a lot of new products which are on the non-par side. Today we have a very big book of 51 products, out of which a substantial number is from non-par, and the non-par is also getting the attraction of the customers. So as you have said, the non-par APE has grown at a rate higher than the par. Slowly we have as of now reached 30% share of non-par APE. There may be some more increase to the non-par share in the near future, but we will now also have par products added to the portfolio, by which we will have something around 40-60 or 45-55 kind of a proportion that we will be able to reach. That's what we are looking at.
Okay, so that's the take on the conversation that we had with the management of LIC and everything they had to tell us in terms of their outlook going ahead. But let's take a look at some pockets of growth that we're seeing in the market right now in terms of what is doing well. And one of those stocks is Titan. As we speak, it still continues to hold on to gains. A 1% move, slightly that coming in on Titan. Let's just revisit what the quarter gone by has been like for Titan. It's been a strong quarter through and through on all metrics, revenue, PAT, EBITDA and margins. All of them are beat versus our estimates. Of course, there was that one-off impact of 100 crore rupees on the jewelry as well as watches segment and on the margins as well to the extent of 400 bips. So all of that has worked out for Titan quite positively. We also interacted with the management earlier, wherein they've maintained their growth guidance of that 11 to 11.5% going ahead for their margins. So that is something that's positive, because that growth guidance has been intact and also that has been maintained going ahead. But what else did the management have to tell us in the morning, and the reason why the stock is up 1% on the back of some of these management comments? Let's go across and revisit that conversation we had with Mr. C.K. Venkatraman, the MD at Titan Company.
The 50% tariff, if it finally deployed, we still don't know. The end of August will tell us that. If it is deployed, it will have a huge bearing on the customer interest in jewelry in the US very much. But that we'll have to wait and see. The impact on so it'll have a bearing if it actually prevails like that after August on that much of the export that happens. But coming, to Titan Company, the share of the US market to Titan's total sale is, just a little over 2% as we speak. And therefore, it's not at all a deal breaker for Titan Company. Obviously, we want to, grow in the US, and therefore we need to find ways of making the products affordable in the US market. Our overall international business has been rising, including the sale of Tanishq in the GCC in Singapore, and we have more plans in those markets. We have just started the acquisition process for Damas, which is a brand which is targeting the Arab market, which is also in those countries. And therefore, the overall international jewelry business of Titan Company is rising. So in that context, manufacturing closer to where we sell, irrespective of tariffs, is also a step in the right direction.
All right, that's the management of Titan. But moving on to some of the other counters in focus. And Sudeep, I just wanted to have your take on the healthcare space. Though, of course, when it comes to the generic companies, we always have that uncertainty around with respect to tariffs for now. But back home, if we look at some of the plays which gain from the domestic market itself, be it the hospital counters, be it the diagnostic counters, the earnings print so far hasn't been that disappointing. What are your thoughts on the same? On one side, it's the hospital stocks that have done very well in the past 2-3 years. But on the flip side, given the heightened competition, the diagnostic companies and stocks were under tremendous pressure. Any particular segment where are you finding opportunity at this point in time?
Well, I think if you look at overall healthcare, pharma companies, we strongly believe, and for quite some time, that let's focus on companies which have major business coming from India. So, Mankind Pharma has been our favorite, and it continues to remain favorite with about 95% of business which is domestic. You're absolutely right. Hospital as a segment, we do like quite a bit. And we believe that the massive consolidation which is happening in this sector is being fueled by, global money. And it's the right way to go about it to improve the quality of service, enhance the service level. And that's pretty much happening all around us. This gives the hospitals a better leverage and better operating margins because of scale. So Apollo Hospital, being the leader, is also our favorite, and we believe that they are doing multiple right things. And I think that's one company which investors should have in their portfolio. But as far as diagnostics is concerned, we are a little skeptical. You are absolutely right. Competition is too much, and competition is having an effect on margins. Players are trying to grow by acquiring companies and increasing their presence in different geographies, but the competition is intense with multiple companies competing on price points as well as service level. Amazon is entering this same diagnostic segment, so I'll be a little cautious and not recommend any buy in the diagnostic segment. Also, remember, the valuations are not cheap, so it's better to stay away there, focus on hospitals and domestic focused pharma companies.
That's the take on the entire healthcare, diagnostics, pharma space. But Sharan, give us a chart check on Sun TV Network. It was the stock that we discussed on the Big Bold brokerage call for the day. Given some bearishness coming in from brokerages, and this stock in particular, I'm flagging off on the back of its earnings because it's lower by 2%, but also at its fresh 52-week low. Sharan, now that the stock has seen this kind of cut and at a 52-week low, are you seeing some more weakness, or now does it look attractive to buy?
Weak will become weaker in the next month or so. So that's the theory of technicals. What is strong will become stronger. I think it's made a new 52-week low. It's no use saying like this will be the bottom or next week will be the bottom. Nobody can catch a bottom. So I think for right now, it's a avoid. If anyone has the stock, it's an exit. It's trading below all its moving averages. There has been no accumulation whatsoever in terms of volume in the last 6 months. So it's a clear exit on all parameters. And I think fundamentally, people are seeing a shift from your regional TVs to your Netflix and your JioStar. So I think fundamentally, I don't think there is too much to see in the company. Technically also, it's very weak. It's an absolute exit on all fronts.
All right, so that's the take coming in on Sun TV. But in some of the upcoming earnings, all eyes will be on Tata Motors. And like we have been flagging off, we shouldn't expect much from Tata Motors given the drop in the volume sequentially. What we have already seen across the segments, be it the JLR as well as India PV and CV business. But yes, the JLR EBIT margin, which is expected to be at 3.5%, that is something that the street will be looking out for. And along with that, the management commentary going ahead. For now, the rates have been decided with respect to the tariffs on EU and Tata Motors. How are they looking at the demand situation in the overseas market? And after the new top boss of JLR, Mr. Balaji, taking over, what will be the key focus areas just at the start for particular segment. And along with that, the outlook for the India PV and CV business will be the key to watch out for. But Saumil, seems like the stock is heading towards the earnings in a very weak position for itself at the day's lowest point. Once again, a 2% cut coming in on Tata Motors. What's your sense that which are the key levels to watch out for? Because as we know that from those 1200 odd levels, Tata Motors, look at the price now, it's almost half.
Absolutely, a very weak stock. It has been struggling to even go above the 20-40 daily moving average in the recent times. It has been trading below 200 daily moving average for last probably a couple of years now. Since the end of 2024. So definitely a weak stock. In the very short term, there is a flag pattern which is broken on the downside. Even in the very short term, I would say that it's a good selling opportunity. 655 should be stop loss, and my targets in the very short term would be 610. I think the next level to watch out for in the medium term outlook is the previous swing lows of 530, 535 levels, and that would be my target in the medium term outlook.
That's the take on Tata Motors. But Sharan, once again coming to you, give us a quick chart check on two of these stocks that we've seen block deals happening very early in the morning. One of them is Bharti Airtel, that's a top Nifty loser, down 3.5%. On the flip side, the other block deal happened in NTPC, which is the top Nifty gainer right now, a 1.5% gain over here. So how are these stocks shaping up on the charts, both Bharti Airtel and NTPC?
Has a good support around 1800 odd levels, and I think that is where it becomes a buy on dips kind of or a SIP stock. Fundamentally very good, and I think next 3 to 5 years for the telecommunication sector are going to be very good. So Bharti, if at all it comes around that 1800, 1825 mark, start accumulating Bharti Airtel. According to your own finances, that'll be a good portfolio pick for the next 3 to 5 years. Again, NTPC, nothing on the chart. On a sideways consolidation, trading below all its moving averages, I would avoid the NTPC again. It's not looking great at all. Again, if it breaks that 330 kind of level, you will quickly see lower levels coming to that 300 and even 275 odd levels. So NTPC at this point is an avoid, but Bharti Airtel, if at all comes to 18, 1825, start accumulating. It's an excellent portfolio stock.
That's the call coming in on NTPC as well as Bharti Airtel. But Sudeep, just wanted to have your take on the whole OMC basket right now. Of late, they have been in the news flow regarding the trade war concerns, but the numbers are not that bad. Look at the numbers from HPCL. It was a good set indeed, and today we have also the news flow that the government will be actually compensating the OMCs for their LPG loss, and maybe the stocks are doing very well today. Anything in particular you're liking within this pack?
I think today's excitement is on the back of the fact that government has kind of announced that they will compensate for the LPG loss, and that's definitely good news for these oil marketing companies. But I think there is a lot of uncertainty around this buying of Russian crude, continuous buying of this Russian crude, which definitely gives them an advantage at this stage. So I'll be a little careful at this stage to jump into any of these stocks. Also, the refining margins have been under pressure, and in these cases, it has been lower than the what was expected in most of the companies' cases. So I'm a little cautious, honestly, and the excitement around LPG compensation coming in is understandable, but otherwise it's avoidable at this stage.
Okay, so that's the take on some of these OMC counters. Last 5 minutes or so left of trade. Sharan, give us your strategy. It also obviously looks like we are going to be ending in the red, and it's not been a very spruced up week for us anyway. Give us a sense of what next week or the near term could look like for our markets, and what some trading strategies should be at market open on Monday morning.
So Snehi, I think this will be the 6th week of negative closing for the Nifty. The last time this happened was during COVID. I think Nifty had 7 weeks of negative closing, followed by, I think, one of the best rallies we have seen in terms of a bull market. Again, this kind of weakness, Nifty is in a very oversold zone. So expect some kind of upside, not that much. Nifty has a very strong resistance now around the 24,700 mark. But 6 weeks of negative consecutive closing, I think you can expect some kind of upside coming in the next week. In terms of strategy, I think 24,200 is a good support for Nifty. If at all we see that will start accumulating good stocks, and I think once the Nifty reverses, and that'll be also the 200-day EMA for the Nifty, I don't see that kind of levels breaking anytime soon. All the negatives now are already out there, so I don't think any major negative news is left to come. So you might see some kind of reversal coming in the next week, followed by a consolidation in the next 2-3 weeks, and maybe after a month or so, we can see a little upside towards the 25,000 mark.
Okay, so those are some strategies to look out for. Somil, Sharan, as well as our guest on the fundamentals. Thank you so much for joining us. On that note, we'll let you go. And thanks, Sudeep. Thanks for your time as well. But, well, big news flow coming in, and that's flashing on the bottom of your screen. We have the Income Tax Bill 2025. Remember, this was introduced in the Lok Sabha on 13th of February this year. And this was meant to replace the existing Income Tax Act of 1961. This, as of now, has formally been withdrawn. This is the Income Tax Bill 2025 that I'm talking about. A new version of the IT bill incorporating most of the recommendations made by the select committee, which was chaired by Mr. Baijayant Panda, and this is going to be introduced on Monday on the 11th of August once again. And why has this been withdrawn and why is it going to be reintroduced? We understand from sources that this is to avoid confusion led by multiple versions of the bill, and also to provide a clear and updated version with all the changes incorporated. The new version of the IT bill will be reintroduced and reconsidered in the House on Monday. Now remember, just on a hygiene note, when we had this word coming in from the Finance Minister, the new bill largely has to do with a lot of grouping of provisions and a simplification of language. That was the main purpose of the bill. So not many new amendments is something that we've seen in the bill, but largely this was the purpose, and it's going to be once again reconsidered on Monday. But a minute and a half left to our market to close for the day. And it's absolutely been a negative day for us on the market.